Hello everyone, it's me again, Peter Harris with Commercial Property Advisors, author of this book, Commercial Real Estate Investing for Dummies, and coach and mentor to many commercial real estate investors all across America. The title and subject of today's video is Apartment Loans 101. Let's get started. I'm going to share with you 5 things about apartment loans. Number 1, how apartment loans differ from residential loans. There are 2 main differences, and I will share those with you. Very important. Number 2, how to qualify for a loan. I'm going to share with you a few things that will put you in a position to get loan approval. And number 3, what apartment lenders like about apartment deals, and equally as important, what they don't like about apartment deals. All right? So number 4 is the loan process in 10 steps. In my prior life, I was an engineer, and I really respected someone that could show me what a process looked like to get something done. I had a tendency to go ahead and do it. All right, so my goal here, and the 4th step, is to lay out the process for you so that you have confidence to go do it too. And number 5, lastly, the apartment loans that are available for you today. Before we get started, I want to share something with you. The apartment business is booming right now, and I really believe that you should take advantage of it. Now, there are 3 reasons why this business is booming. Number 1 is interest rates are low. Number 2, there's a great demand for apartment rentals. And number 3, it's just such a great source for potential wealth creation. And with that said, there's plenty of money available and chasing after good deals. So I'm hoping in this video I can share with you how to position yourself to take advantage of this window of opportunity. All right, so let's get started with number 1. Number 1 is how apartment loans differ from residential loans. I'm going to define our apartment loans for this video as 5 units and more. Remember, I'm all about commercial. All right, residential loans are fourplexes, triplexes, and duplexes. So this video, we're talking 5 units and greater. All right, so here's how they differ. Number 1, the apartment lenders will qualify the property first and the borrower second. So the apartment lenders will look at things in the property such as its ability to cash flow after paying the mortgage. They'll look at the property's condition, and then also look at the property's neighborhood and its location to make sure it's sustainable. All right, and then they'll look at the borrower second. Now, in residential, the reverse happens. In residential, when you're buying a home or a duplex, they will look at the borrower first and then the property second. So that's the first major difference. You need to understand that. So as you get ready to present to a lender, make sure you have everything for the property available first. All right? All right. Number 2 is, the second difference is the down payment requirement is higher. A typical apartment loan will be 20 to 30% down payment. As you move closer to the edges of the West Coast or edges of the East Coast, those down payments can be 35 to 40%, just depending on where they are. Now, you probably know that a residential loan, a home or duplex, you can probably get a loan approval for 5 to 10% as a down payment. That's available today. All right, so those are the 2 major differences. Now I would like to move on to how to qualify for a loan and how to position yourself to get approved. Number 2, how to qualify for an apartment loan. Most people really understand what it takes to qualify for a home loan, but only few people understand what it really takes to close or to get approved for an apartment loan. So I'm going to share with you what the 3 C's of getting approval are for an apartment loan. The 3 C's are cash flow, collateral, and credit. All right, so you need these 3 C's working in conjunction with one another to get approval. Number 1 is cash flow. This is the very first thing that the lenders will look at. The lenders will look at the property's ability to bring in the cash flow to pay all the bills, pay the mortgage, and have something left at the end of the day. All right, another way of saying this is the bank will look at the property's annual net operating income and its ability to cover the annual mortgage by 1.2 times. All right, let me repeat that. So the bank will look at the profitability for the property's annual net operating income to cover the annual mortgage by 1.2 times. This is called your debt coverage ratio, otherwise known as DCR, a very important term for you to know. So memorize that term, debt coverage ratio. Again, it's the annual net operating income divided by the annual mortgage payments. Okay, it should be 1.2 or greater. And obviously, the higher that ratio is, 1.5, 1.6, the greater the deal is. The greater the bank looks at this as less risky. All right? Okay, number 2 is collateral. This is the second thing that the banks will look at, and it's as equally as important as the cash flow. All right? Collateral is 2 things. All right? So the bank is going to want collateral from you if they give you a loan. The collateral is number 1, the property, and the collateral number 2 is the down payment, your down payment. So if you were to default on the mortgage and lose the property, the bank's going to take the property back and your down payment. So that's the collateral. All right. So the key term here is LTV, loan to value. It's very typical that you see out there something that says 75% loan to value or 75% LTV. What that means is the bank will the bank will lend you 75% of the purchase price, right? Once you put in the other 25% as a down payment, all right? That's loan to value. Another key term for you to know in understanding apartment loans, all right? Number 3 is credit. This is about you. As I mentioned a few minutes ago, one of the biggest differences between apartment loans and residential is that the banks will qualify the property first, all right, cash flow collateral, and then come to you second. So credit is about you, and it's about your credit worthiness to the bank. All right, it's all about risk for the bank. All right, so here are a few things the bank will look for. They'll look for a 660 FICO score, or a minimum of 660. They don't want you to have bankruptcy in the last 7 years, nor do they want you to have any short sales or foreclosures within the last 3 years. No open judgments against you, open, all right? They want you to have liquidity at the end of the transaction, some money in the bank after you close, and also there's a net worth requirement for you at the time of applying for the loan. They want you to be worth something when you apply for the loan. All right, so those are the 3 C's, cash flow, collateral, and credit. One other thing I want to mention is some of you may be thinking, Peter, during the last downturn, my credit got smashed because I lost a few homes, or I was laid off and I couldn't make the payments and my credit smashed. What do I do? Well, don't worry. There's always hope. All right. So there's basically 3 things you can do. All right. Number 1, if you were to have a great story behind why your credit was smashed, for example, you filed bankruptcy because something happened in the business, banks will take that great story into consideration and still give you a loan. I hear many stories about that happening. Right. Number 2, there's hard money loans for good apartment deals. All right. And number 3, your third option is the master lease agreement. One of my favorite ways to buy apartments and commercial property is with that technique. No banks, no credit needed. I have a video on that if you search through my YouTube channel. All right, so so let's move on now. I want to share with you what the banks like in apartment deals and what they don't like. Number 3, what apartment lenders like and what they don't like. There are 3 major things that lenders universally like and don't like. Number 1 is lenders like properties with solid cash flow. Cash flow is king, as you know, in any business. The same thing in the apartment business. Solid cash flow allows you to maintain the property, pay its bills, pay yourself, all right, and it mitigates the risk that the bank has when it makes you a loan. Number 2 is a good price, all right? So lenders like a good price. They don't want you to overpay, but also if you overpay, it really put constraints on the cash flow, and that's risky for a bank. So remember, for a bank, it's all about risk. It's all about risk. All right. And number three, lenders like when you have evidence of good operational history. All right. What's that evidence? The evidence is financial records, right? So do you have financial records showing going 3 years back, 2 or 3 years back, showing that the property made money in these last 2 or 3 years? All right. So banks love to see that, because if they can see that the current owner is doing that, most likely you can too. And again, it's all about risk, and the banks see that as a good risk. All right, so to put yourself in the best position to get a loan approval and to understand the loan process, try to have these three things going in: solid cash flow, a good price, and evidence of good operational history. All right, now let's go to what banks don't like. Number one, see my sad face here. Banks don't like if the current owner has poor financial records, all right? So if going back this year, last year, and the year before, there are no records, or the records are just scribbled on a piece of paper, banks don't like that. That's you could lie and make up the financials. That's too much of a risk for a bank. Banks don't like that, all right? All right, so number two is a poorly maintained property. When banks see a poorly maintained property, they run, they get scared. So what they may do is ask you to come up with more of a down payment to mitigate their risk. So banks don't like properties that are really poorly maintained, right? And lastly, banks do not like properties or want to give a loan in weak markets. So if the market has high vacancy, or there's plight, or there's poverty, banks see that as risky long term, and they won't lend there. All right. So there are some cities where even a major bank will not give a loan in that area. That's a shame, but banks do not like weak markets. All right. So one last thing I want to add to the side is so some of you may find properties with poor financial records, poorly maintained and weak markets, right? Banks don't like them, but our company, we love them. Let me tell you why. So these are actually very exciting. So if a property has poor financial records, poorly maintained and weak market, especially the first two, we can probably create a great deal. All right. So many of our students create great deals because these problems. All right. What's the saying? A person's trash is another person's treasure. All right. So this is treasure for us. All right. Now the weak market could be treasure too. The question to ask here, yeah, the bank will see weak market, but what we need to see is, where is the market today? All right. It may be weak, but is there gentrification going on? Is there a path of progress going straight through the neighborhood? If it is, we're interested. We want to catch that wave on the way up. All right. So yeah. So again, banks may see that it is risky, but we can turn those things into great deals at our company. All right. Okay. So now I explained to you what lenders like and don't like. The next thing I'm going to share with you is the process, the 10 steps of getting a loan done. Number 4, the apartment loan process in 10 steps. In my prior life, I was an engineer for about 16 years, and I could really appreciate when someone would give me the process of how something's laid out in that job. I tend to go forward, move forward with that project if I can see the process laid out from top to bottom. So the fear was gone, the trepidation was gone, and there was a sense of confidence that I can see the beginning and the end. All right. So same thing here. My goal here is to show you the process, the 10 steps from finding a property all the way to getting it closed, an entire loan process. All right. So let's get started here. Before I start, I want to mention something, that the apartment loan process, it can take, some lenders will say 30 to 45 days, and don't believe them. It's going to take 45 days or more. And in a perfect world, everything was perfect, and maybe they did 10 loans from you and they have all your information, they know the market well, maybe 30 days, all right? But most likely it's going to be 45 days or more, all right? In my experience, I've never had a commercial loan close in 30 days, and you shouldn't either, all right? So just expect 45 days or more. All right, so number 1, and the step number one is you're going to send the property's financials and the photos to the lender. So you're going to send last 3 years of income and expenses to the lender, plus about 12 photos of the property to lender, just to get started so they can take a look at things. All right. Step number two is the lender will review your credit. All right. So at this point, they're gonna do some pre-approval here with this step and this step here to make sure the property you somewhat pre-qualify. All right. And then in step number three or number two, at this point, they will probably send you if everything tells it okay, they will send you the loan application to get that started. Step number three, they're going to order the appraisal and inspection. All right. So during this step, they will also review with you what some of your loan options are and what's available today based upon these first two things. All right. All right. So step three is before I on step three on the inspection. What the lender would do is they have their own what we call site inspector. So the site inspector will go out to the property, look at a sampling of the units and walk around and report back, make sure the property isn't falling down, make sure it's not in a blighted or poverty-stricken area. Okay? All right. And then step four, if 1, 2, and 3 are okay, the lender is going to register the loan into their system and lock down the interest rate. So when you close 30 to 45 days later, the interest rate will be back to where you registered on the day you registered the loan. All right. And number five, well, before number five, so 1, 2, 3, 4, that is what I consider phase one. All right. So you get through phase one. Step number five starts with phase two. Phase two is there's a lot more underwriting the lender has to do. All right. It takes 1 to 2 weeks for them to get through these things. There's about 18 to 20 things that they have to do, right? That not you have to do, but they have to do. And it takes 1 to 2 weeks, all right? Step 5, all right? So after they come out of this, they go to step 6, all right? Step 6 is they're going to order the termite and set up a title for you. Step number 7 is if 1 through 6 turns out okay, it's going to go to your file and it's going to go to the loan committee for them to look at your loan and ask for documentation to clear things up, and finally to give you number 8, an approval for the loan. So if we get an approval, you're going to get what we call a letter of commitment. It's 1 page showing you what the lender will do for your lending needs. All right. Now, if you don't get approval, you're going to get what I call an OR. All right. So get an approval, or the OR is they're going to request more documentation on the property, on yourself, on the market, whatever it is. Every single time they will request more documents, right? That's why I say it takes 45 days or more to close a commercial loan, because there's always this OR, all right, before we can get the letter of commitment. So once you're approved and you get to celebrate and take a sigh of relief, you get to go to step 9, which is finalized closing. So in step 9, your lender, yourself, the title company, and possibly your attorney will all work together to pull everything together to get to step 10, which is closing. All right. So closing, believe it or not, is somewhat of a relaxed day because everything was done at step 9. So on step 10, you are pretty much going there to review and sign off documents, and then the recording of title happens, and then you're all done. All right. So these are the 10 steps. You may want to rewind and watch them again just to get a feel for the flow. All right. And again, it takes about 45 to get this done. All right. So again, if I believe that if you can see the process, you have more confidence going into it. And I hope I accomplished that there for you. All right. So the last thing I'm going to share with you in this video is what loans are available to you today. Let's go there. Number 5, apartment loans available for you today. All right, let's get started. Well, the first question you probably have for me is, Peter, where do I go to get an apartment loan? Well, the answer is twofold. Number 1, you can go to your local small bank or even national bank and request a loan there. And number 2, you can take it to what we call a mortgage broker. All right. What a mortgage broker does is he takes your file, your loan request, and he'll take it to that small bank or a national bank and get paid a commission for it. I work with a mortgage broker, and what he does is he takes my loan request, and in fact he has 50 to 60 lending relationships out there in the world that he can take my file to and get the best loan for me. All right. So there's two ways. You can take the loan to yourself to a small bank or national chain that's close by the property, or you can just hand your file over to his mortgage broker and he will do the walking for you. So your choice. I would try both if this is your first time, and that's because right now there's so much competition for loan business that there'll be no shortage of people wanting to give you a loan if the property is good, the property qualifies, and you qualify. All right. Okay. So next I want to get into is let you know that there is so much money right now chasing or available for good apartment deals. And in this short video, I cannot do it justice or even scratch the surface of what's available out there for you in terms of apartment loans. There's so much out there. But in these next few minutes, I'm going to share with you a couple of options. All right. The first two options are what I call Fannie Mae and Freddie Mac loan products. They have what we call a small apartment loan program. It's very popular, and they're being very aggressive this year. In fact, Fannie Mae and Freddie Mac are going to do this year $60 billion worth of loans. That's 60 with a B, $60 billion in apartment loans this year. And I just read an article that in the first quarter of this year, they're already at about 35% filled of this quota. All right, and they predict by the middle of the fourth quarter that this will be gone. All right, it'll be gone. So there's a window of opportunity to look at these two loan products. All right, as a beginner. I'm going to share with you now what some of the requirements are or parameters on this small loan program from Fannie Mae and Freddie Mac. Number one is it's going to be used for commercial loans, apartments 5 units and greater. Loan amounts minimum of $750,000, maximum of $5 million. All right, so if you have a loan request between $750,000 and $5 million, you can look into Fannie Mae and Freddie Mac loan products. There's going to be a minimum of 20% as a down payment. There's a minimum requirement of a 1.25 DCR or debt coverage ratio. And by now, by watching this video, you now are an expert on what DCR is, right? Okay. And next is you're going to have low fixed interest rates. All right. Right now, rates are great, and they're going to be fixed over 5, 7, or 10 years with a 30-year amortization. So this is great. Next, you're going to have available as an option to have interest-only payments. And why this is helpful is because if you buy a property and the cash flow is kind of tight the first 3 years, you may want to do some repairs or make it look nicer, and you want to use the cash flow. So this loan product will allow you to make the lower payments, paying interest only over the first year or 2 or 3, just so you can catch up with the property. All right, so it's a great option here to have. All right, next is these loans are non-recourse. That's very important. All right. Now, if you were to buy a single-family home and you failed, the bank can come after and take the property back and then come after you. Right. So with these Fannie Mae loans, with this 5+ units, these loans are what we call non-recourse. So if you fail this loan, they will take back the property, of course, to keep your down payment, but they cannot come after you personally. All right. So they have no recourse to come after you personally. So I can simply say that you are not personally guaranteeing this loan. That's great because you might purchase a $7 to $10 million property, have a $5 million loan, and fail, and they still can't come after you. So that's a good thing to have. And lastly, you need to have a 680 FICO score, and the good part is You don't need experience if you are local and the property is local. So you don't need experience. You don't need to have 2 or 3 years in this business to qualify for these loans if you are not an absentee owner. But if you are an absentee owner, all right, so these loan products may still work. You're just going to have 2 years or 3 years of experience, plus have an experienced property manager managing your property for you. All right, okay, so that's what's available today. Again, I'm only scratching the surface of what's out there. So go and speak to those small banks, those national banks, call the mortgage broker up, let them know what you're trying to do, but get involved and get educated here. All right, okay, so thanks for watching this video. If you want more videos like this, more training like this, please feel free to go to our website, commercialpropertyadvisors.com, or simply subscribe to this YouTube channel. Thank you so much today for watching Apartment Loans 101. I'll see you at the next video.